Hi, it's Darren Aerosmith with the fourth quarter update for the CI Floating Rate Income Fund. Through the last 3 months of 2021, the U.S. 10-year Treasury yield exhibited volatility but ended the quarter only a couple of basis points higher, while the curve generally flattened, especially in the front end. Things drastically changed to start 2022 as markets priced in the realities of more persistent inflation and a higher likelihood of a more hawkish U.S. Federal Reserve. On January 12th, the U.S. released a headline CPI figure of 7%, making it the highest reading since 1982. Investors are starting to believe that inflation, rather than the Omicron variant, may be the biggest threat to the U.S. economy at the moment. We believe that the Fed is taking the idea of a near-term interest rate hike much more seriously than even a month ago, with markets now pricing in the first hike at the March 16th FOMC meeting. These developments have pushed rates up across the entire yield curve. Expectations of the Fed raising rates through 2022 to battle inflation sets up a challenging return environment for traditional, long-duration fixed-income asset classes. Loans, which make up a majority of the CI Floating Rate Income Fund, can offer investors some protection in a rising rate environment due to their unique characteristics. These securities are typically issued by high-yield rated firms and incorporate a floating coupon that resets every 1 to 3 months based on a reference rate plus a spread. This reference rate has historically been LIBOR and was highly correlated to the Fed fund rate. These securities therefore have the potential to have their coupons reset higher as the Fed increases interest rates. We believe loans and other floating rate and short duration securities are an attractive investment opportunity with only a few months from the market's expectation of the Fed's first rate hike. The CI Floating Rate Income Fund provides exposure to a diversified set of floating rate securities like loans, floating short duration corporate bonds, and floating preferred shares. This diversified and higher quality approach allows our team to pull on multiple levers that drive returns based on our outlook. Since the fund's inception in mid-2017, it is the #1 ranked fund in the floating rate loans category. Please don't hesitate to get in contact with us if you have any questions. Thank you.